If your trading plan depends on that $92K CME gap, you might want to rethink your strategy. The crypto market is notorious for defying expectations, and Bitcoin especially loves to catch traders off guard. Relying on a single technical level, especially one as widely discussed as the CME gap, can be risky. Markets often move in the direction that surprises the most people. And right now, too many eyes are glued to that gap. If you're waiting for a textbook dip to $92K before making your move, you're about to get left behind. The market rarely gives everyone what they want, and the more obvious a level becomes, the less likely it is to be hit cleanly. While some traders are paralyzed by indecision, others are already positioning themselves for the next big move. If you're bracing for a crash, you're not alone. There's a lot of anxiety in the air, and it's easy to get caught up in the fear. But remember, the market often climbs a wall of worry. When everyone expects a dump, that's when the market loves to do the opposite. You might miss the pump if you're too focused on the downside. Bitcoin has a history of explosive moves that leave cautious traders in the dust. The best rallies often start when sentiment is at its lowest, catching most people off guard. Let's break down what's really happening with Bitcoin right now. There's a lot more going on beneath the surface than just a single price gap or a scary headline. Right now, Bitcoin's sitting just under $100K, cooling off after that crazy run to $111K last month. That surge was fueled by a mix of institutional buying, retail FOMO, and a squeeze on short sellers. Since then, we've seen a healthy pullback, which is normal after such a parabolic move. The vibe? Pretty neutral, almost fearful. Traders are on edge, unsure if the next move is up or down. This kind of uncertainty is often the breeding ground for big moves. The fear and greed index is at 42, which usually means people are nervous. When the index is low, it signals caution and even fear among investors. Historically, these are the moments when the market is primed for a reversal to the upside. But here's the twist. Everyone and their grandma is watching that $92K CME gap, waiting for a dip. It's become the most talked about level in crypto right now, and that's exactly why it might not play out as expected. The more people anticipate a move, the less likely it is to happen in a straightforward way. Markets love to punish the majority, and right now, the majority is waiting for a dip that may never come. I'm calling it, the market's gonna ignore that gap and head straight for new highs. We've seen this play out before. When everyone expects a retrace, Bitcoin just keeps climbing, leaving the crowd behind. Why? Institutions are quietly piling in. While retail traders are hesitating, big money is accumulating. They're not waiting for the perfect entry. They're building positions now, before the next leg up. On-balance volumes rising, just like before the last huge rally. This indicator tracks the flow of money into and out of Bitcoin, and right now it's showing strong accumulation. That's a classic sign that smart money is getting ready for a move. And we've got a classic bull flag pattern. If Bitcoin cracks $109K, we could see a rocket to $130K. Bull flags are continuation patterns, and when they break, the move can be explosive. Keep an eye on those key levels. Now watch out for June 26th, that's when the next big catalyst hits the market. The upcoming GDP numbers are set to drop, and they could shake things up. Economic data always has the potential to move markets, especially when expectations are high and nerves are frayed. If the GDP numbers come in low, retail traders will panic about a recession. We could see a knee-jerk reaction to the downside as fear takes over. But don't be fooled by the initial move. I think the market will flip the script and pump instead. Bad news can sometimes be good news for risk assets, especially if it means more stimulus or easier monetary policy down the line. Bitcoin thrives in uncertain environments. Plus, altcoins are heating up. When Bitcoin starts to move, it often drags the entire crypto market with it. We're already seeing signs of life in the altcoin space, with several coins breaking out to new highs. This could be the start of a new alt season, where money rotates from Bitcoin into smaller, high-potential projects. If you're only watching Bitcoin, you might miss some of the biggest gains elsewhere. If BTC takes off, get ready for an alt season right after June 27th. Historically, altcoins lag behind Bitcoin's initial move, but when they catch up, the gains can be massive. So don't get stuck waiting for that dip that never comes. The market rewards action, not hesitation. If you're always waiting for the perfect entry, you'll miss the move entirely. Stay sharp, big moves are coming. The next few weeks could define the rest of the year for crypto. Make sure you're ready to act, not just react.